We are covering two mandatory health insurance policy provisions: the payment of claims provision and the physical examination and autopsy provision. These are tested on the National Health Insurance Exam and are crucial for understanding the operational mechanics of a policy after a loss occurs. First, let's break down the payment of claims provision. This provision dictates who gets paid when a claim is submitted. For the exam, you must know that claim benefits are typically paid to the insured. However, if the insured has assigned benefits, the payment can go directly to the service provider, like a hospital or doctor. This is a common scenario. In the event of the insured's death, any death benefits are paid to the named beneficiary. If there's no beneficiary, the payment goes to the insured's estate. A key concept tested here is the facility of payment clause. This gives the insurer the option to pay a small portion of the death benefit, usually up to $1,000, to any relative by blood or marriage who appears equitably entitled to it. This is often done to cover immediate funeral expenses and avoids the delay of probate. A common exam trap is to confuse this with an assignment of benefits. The facility of payment is at the insurer's discretion and is meant to simplify small, urgent payments after the insured's death. Now, let's shift to the physical examination and autopsy provision. This provision gives the insurer the right to have the insured examined by a doctor of their own choosing during the claim process. For the exam, the most critical point to remember is that the insurer always pays for this examination. They can require as many exams as are reasonably necessary while a claim is pending. In the case of death, the insurer also has the right to conduct an autopsy at their own expense to determine the cause of death, unless state law forbids it. The exam will test you on who bears the cost. The answer is always the insurer. But trick question might suggest the insured pays or that the cost is shared. This is incorrect. The insurer pays for the exams and any autopsy they require. A helpful mnemonic to remember the insurer's rights here is pay to say. The insurer has to pay for the exam to have a say in verifying the claim. This links the insurer's right to an exam directly with their financial responsibility for it. Remember, these provisions are in place to protect the insurer from fraudulent claims while ensuring that legitimate claims are processed fairly and paid to the correct party. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.